Hi, my name is Peter Poljan from Poljan Properties, and I'm here with my colleague Danny Patzes. And we wanted to share with you some of the creative financing solutions that we're trying to explore for our clients in this higher interest rate environment. We're very excited to welcome Brian Shahwan today from William Raveis, and he's going to talk to us about some of the options that are out there in this higher interest rate environment. So Brian, welcome. Thank you very much for joining us today.
Thank you for having me. I'm excited to be here.
To get us started, Brian, can you just talk to us a little bit about your background and your experience?
Yeah, absolutely. So, like you said, my name is Brian Shahwan. I am a vice president mortgage banker and broker at William Raveis Mortgage. I have been in the real estate industry for about 7, almost 8 years now, specifically around the New York City market. In mortgages, around 4 years. Working with our fearless leader, Melissa Cohn, who's been in the industry for over 40 years now.
Thank you very much, Brian. I appreciate that. There are a couple of options that we've gotten some questions on from clients. One of them is, what is an assumable mortgage, and is this the right product for us to explore here in New York? And then the other one is around a purchase CEMA, and what is that, and how might that benefit our clients? Could you talk to us a little bit about what an assumable mortgage is and whether you think it's a good vehicle for some of our clients in this higher interest rate environment?
Yeah, absolutely. So an assumable mortgage is essentially a loan that allows a new buyer to take over the existing mortgage on a property. So the buyer assumes the loan, they assume the rate and the payments exactly to the terms of the original loan. So if the seller had a great interest rate locked in, the assumable nature of the loan can be a big selling point. But keep in mind, not all home loans are assumable, including most conventional mortgages. Think, government loans like FHA, VA, USDA. These are all assumable as long as specific requirements are satisfied. So while it may not be very enticing, in our area in NYC, as you can't assume a mortgage on a co-op and most condos don't have FHA or VA approval, let's say you did find a VA loan you wanted to assume, you'd be able to take over the terms of the existing VA loan even if you weren't eligible to take out a VA loan yourself.
In the New York market, it seems like it's a pretty small sliver where this might be a good fit for potential buyers and sellers.
Yeah, absolutely. I mean, most condos here in the city aren't FHA approved. There's not many VA loans here currently. So yeah, I mean, it would essentially be a diamond in the rough.
Since it appears that an assumable mortgage may not be a viable option for many buyers here in New York City, we do know of this other option called a purchase CEMA. Can you talk to us a little bit about what that is and how that works?
Yeah, absolutely. So a purchase CEMA essentially assigns the mortgage over to avoid mortgage recording tax for the buyer and transfer tax for the seller. So the seller is basically, again, assigning their existing mortgage balance to the buyer, who then assumes it and consolidates it into a new loan. So it may be hard to find, Fannie Freddie banks that will do these types of programs or loans, but most banks on the brokered side, fortunately, will finance them.
So just to clarify that, Brian, so when in the purchase CEMA, the buyer doesn't take on the seller's interest rate. They're really, the savings there is really around the mortgage recording tax as well as the transfer taxes.
Correct. So you are not getting the initial interest rate or terms or payments, essentially, of the seller. You are getting a completely new loan at today's market rates. The benefit, to your point, is that you are saving on the recording tax, the seller saves on the transfer tax, which, is no small savings. They can be tens of thousands of dollars, which is why they're very enticing in this market.
And Brian, typically with those savings, is that typically split 50-50 by the seller and the buyer? Is that typically how it's done, or is it parsed out?
Not necessarily 50-50 even split. There's different ratios, but it usually works out where there's split of sorts of savings that are pretty substantial for both parties.
We discussed some of the pros of a purchase CEMA. Can you tell us a little bit about what some cons may be?
So you can't do them on co-ops, so only eligible for single-family residences and condos. It could be hard to find a lender that will do them. Again, most Fannie, Freddie, conventional banks won't allow them. So, working with a mortgage broker could be more enticing. The rates may not be any different than the conventional rates. The process is certainly the same. But a con could also be that the process to assign the mortgage could take longer, and usually does take longer. It takes about 4 to 6 weeks just to do the assignment. So if you're looking to close quickly, this may not be the best option for you.
But so Brian, the question really is like Chase, Wells, are they more likely to do it than a community bank, or does it not really matter? I guess that's the...
No, so you most likely won't find that the big commercial banks like Chase and Wells will allow a purchase CEMA. You'll most likely have to go to the brokered side, which sometimes sounds a little scary to people. They think, additional points or fees or higher rates. But in most cases, the rates are just as good, if not better. The terms are exactly the same. There's usually no additional fees. It's just that sometimes in the brokered realm, you can find a bank that offers all types of different creative options and programs for people that don't fit in that Fannie Freddie box, like this purchase CEMA program.
Are there any other programs outside of the Assumable mortgage and the purchase CEMA that buyers and sellers should be aware of in this new environment?
Absolutely. There are tons of different options out there that buyers and sellers should consider during this process. Typically, most people will go to 1, maybe 2, 3 banks just to shop rates. And in that sense, you're only getting the programs that specific bank offers. When you work with a broker that has relationships with several different banks, you're able to not only shop rates for the best, and lowest out there, but you're also able to see the programs from all of the different banks that broker has relationships with. So some of those programs could be bank statement loans for self-employed borrowers that may not fit in the conforming, again, Fannie Freddie guidelines. There are IRA distribution loans for borrowers that have substantial assets in the bank but are retired or don't have income. By taking a distribution from their IRA account, all of a sudden we show income and no problem. There's also a really, in my opinion at least, I get excited for this kind of stuff, but an exciting program for investors called a DSCR loan, which is essentially a debt service coverage ratio loan, which qualifies the mortgage based on the future rental income the property could produce. So no income source is required, no tax returns, credit scores as low as 650, and essentially whatever the appraisal comes in at or rent roll, showing what the future rental income the property could produce is, as long as it matches the full mortgage payment, and sometimes goes down to 75% of that payment, then we're good to go. No tax returns needed, no pay stubs, no income at all. And in a high rental market like we're seeing right now, a lot of people that have the assets in the bank to cover the closing costs and down payment are taking advantage of this because it's an easy way to qualify and make some money.
Thank you so much, Brian, for all the help today and for spending the time to chat with us through these creative financing options. What would be the best way that someone can get in touch with you?
Thank you for having me. And you name it across the board: phone, email, snail mail, pigeon. But phone would probably be the easiest. I can be available at 302-293-7433.
So thank you again, Peter Poljan and Danny Passes from Poljan Properties. If you have any other questions, please don't hesitate to email us, call us. We look forward to hearing from you.